All right, let's go ahead and review December 9th price action. So, looking at the daily chart, the last 3 days, Wednesday, Thursday, Friday of last week, those were more sideways, right? We had Wednesday was up with the tail on top, and Thursday was down with the tail on top, and then Friday was much more of a doji bar with a large tail on top. This is following the breakout of these highs here. And to me, I was expecting today to be more sideways to down, right? This, where we had been strongly bullish through here, these 3 days here are different from what we were getting through this. So it was looking like the bulls were weakening as we were getting farther away from the moving average. So they were probably not going to be as strong come into this week. Something else I was looking at was this gap here. We have the high of this bar and the low of Wednesday did not overlap. So Wednesday gapped up and then pulled back and did not actually come back and touch that gap there. So that gap's open. The gap was open, and that's what I have. That's our yellow horizontal line here. So if the day was going to sell off like it did, then we have this gap as a target, and ended up getting to that gap today. First trade I have marked here is right here. So what I'm looking at on this is on the first bar, the bears, the bulls quickly moved up and tested the close of yesterday. That's what this tail on top is here. And then it sold off with two bear bars. Now, anytime you're getting two bars on the open that close beyond their midpoint and have not too large of a tail, then it's reasonable to go ahead and buy or sell the close of that. So with these two bars, that would be a sell the close bar. And basically on that, you're betting that the high of the day is going to be right here, and the rest of the day would sell off. Looking at like Thursday as an example, we have two bars, two decent closes. So people would buy the close of that, betting that this is the low of the day. It didn't end up being the low of the day. However, the odds often are that if you're able to risk a small enough amount, then your profits will be much greater when it does end up being the high of the day. So like if someone had sold here, they would have been able to take advantage of all of this profit through here. To me, a better entry is waiting for the sell below this bar here. Let me zoom in on the chart. Let me zoom in on the chart a little bit more. So what we have here, 3 bars down, and then a pullback, then a second pullback. So the bulls have made 2 attempts up here to move up, and they're failing. And you can look at this as a second entry long, first entry, pullback, second entry here. And how I often say it is I just look at it as 2 attempts by the bulls that fail. And maybe some might sell below this doji bar here, this bearish doji. Probably better to sell below this strong close here. So after I see those 2 attempts like that, right, we're closing below the 200 moving average, reasonable to try to go for a short there. How I would do that is I would go for 5 points. That's kind of how I do it. But it'd be reasonable to go for 2 times or more, especially considering we have this gap down here. And the close of this close here is also a target there. So you have targets below, so it's reasonable to go for a scalp profit like the 5 points or a much greater profit. So if you're to go for 2 times your risk, you'd be looking at something like that. And so you could even go for 5 times or more risk and bet that this gap will close. And that might be a bit aggressive, but that's just kind of how the odds play out. If you go for more of a profit, you'll win it less often, but when you do win, you'll have a much greater profit. So market had the strong sell-off. It was starting to get a bit exhaustive down here, right? So we have all these closes, And then boom, we have the biggest bear bar in the sell-off at the end of the sell-off. That often means exhaustion, that their bear's been selling and now they've gone too far. They've also closed this gap here. So they've met that target. And how much more selling do they really want to do? You know, imagine if you had sold here and you held all through here. You're thinking, wow, I've made all this profit. I think it's time for me to go ahead and take some off the table. And these 5 bull bars here, that was people taking their profits. So we would expect there to be more selling after this. Not necessarily a second leg down, but we would expect that the bulls would not just immediately be able to reverse up into a bull trend. It's possible, but it's unlikely. Normally, this people that sell this close would be able to get out at least break even and avoid a loss, which they were able to over here. Some scalps I took in this area ended up I sold above this bull bar here, and then I scaled in higher at the moving average, and then I got out with a small profit here. And my other scalp was I sold above this high, and I sold at this point, and then it's got out with 5 points over here. So those were 2 of the scalps I took today. I was looking at this as a double top. So when this, after this and then the second leg up, I drew this double top in here. I'm going to go ahead and mark this as a short because this is the short as well, short and below this. Bear trend, possible double top at the moving average. Good looking bear bar. It's reasonable to sell below that. Now this bull bar, I have this marked. It might be a bit aggressive. It's definitely something that someone doesn't have to take. But the reason I have it marked is we can see all the attempts down that the bears are making through here. They're trying here and here and a couple more attempts right here. So the bears that were shorting through this and that are scaling in, they're having difficulty getting out break even. You know, so if they had sold here and sold more here, we can see this tail did not come back to their break even point. So the bears might have some concerns that they're going to be trapped and that the market might be attempting to reverse up from here. So I would look at that as, to me, I think that's a reasonable long. It is a bit aggressive because it's really the first entry you've had above the moving average after this strong of a sell-off. Perhaps a better entry to go long would be above this bar here. So now the bears have made even one more attempt down, and from there they're failing to go lower. And now we've had a second time we're above the moving average, so better odds of buying here. So maybe you might try to get more of a swing trade out of this one because you're lower odds, but this would be more reasonable to try to scalp or go for a swing trade. So these 5 bull bars up here, we could expect there to be a second leg up after that. Another reason we could expect a second leg up is because this bear trend got exhaustive here. And often when it gets exhaustive like that, the market will try to make 2 legs up, and the bulls will see if that 2 legs up is enough to really fully reverse the market or if the bears can retake control. Is this the second leg up? Some might consider it that. Or is this a second leg up? So first leg, pullback, second leg. Ultimately, you know, they both were counted as that. Either way you look at it, those were the second leg, and then the selling resumed. So once the market gets back below the moving average, I'm looking at this as the bulls have had their 2 attempts up. Now the bears are retaking the market. So bears are going down. Bull bar here. Second bull bar. And the bears are really starting to retake control here. This is a pattern I really like to look for when I feel like one side is trapped or when they're giving up. And then when you find the signal bar that tells them to really get out of their position, then that to me is a great entry for at least a scalp. And you can see, this sell off here was somewhat tame. It was kind of slowly moving down through here, and then boom, you have this big bear bar. And this bear bar was like that because so many bulls got out below this bear bar here. So how I do those trades: put my stop above the bar, enter right below it, and then just try to go for like 5 points. Try to get out before these lows here. So we have 5 entries here on the 5-minute chart. 3 of them at least would have given you 5 points. These two, you probably would have you would have lost here, and maybe you would have gotten out break even, or maybe you would have won, or you would have lost depending on where you put your stop and how you manage this one. Either way, if you took those 5, you would have been, at least plus 8 or 10 points on the day. To me, there's usually a trade in around the first hour or so when the market is starting to find its direction. What I like to do is to trade around like 1 or 2 o'clock or 2:30. And once the market is leaving the middle point of the day, then it starts to find its direction again after the middle portion of the day. And so 2 examples of that are here, where we've kind of been in this trading range, and the market is deciding, is it going to continue down or is it going to reverse up? And it looked like it was trying to reverse up, and it got enough for a scalp, although it ultimately fell down. But then as it was falling down, it created another entry to get short here. That was good for a scalp. So I like to look for those trades around between 1 and 3 o'clock when the market is either continuing its initial direction or reversing it. And there seems to be often good scalps around that 2 o'clock period. So that's our review. If you guys have any questions, let me know on the Discord, or just ask it in the comment section there, and I'll be happy to help. All right, see you guys.